The dip that keeps on dipping, guys. Holy freaking crap. Just when you thought things couldn't get worse, they get worse. The markets today were awful, and we got to break down what's going on. We got to talk about some stocks in general, earnings reports, and we got to break down some charts. But before we do that, get your free money from Moomoo. You get up to 6 free stocks, each of which could be valued all the way up to $3,500. Just use my link down below, deposit at least $100, and boom, just like that, you get your free money. And with that being said, let's dive into the video. So like I said, guys, today was freaking awful. It was a bloodbath, and just when you thought things are possibly going to get a little bit better 2 days ago, we got yesterday where the markets dumped, and of course today we had the Dow Jones down 2.8% at the close, same with the S&P, and we had the NASDAQ 100 down 2.7 as the Russell went down 2.5, and brace yourselves for this, we had the VIX up about 25% on the day, and the metals went down as well. Gold down 0.75, and we had silver down about 1.6% on the day. So look at this. Just in the past 2 days, SPY is down from 450 to 423 now. We just hit that in the aftermarket hours. It is down almost 6%. We have triple Q. Let's pop that up. Triple Q is down from, where was it? About 348 yesterday morning, and it just hit 324. This thing is down almost 7%, which is wild. We have the Dow Jones. Let's see that. We might as well do it on the Dow and the Russell too, right, guys? The Dow is down about 5% from yesterday's high to where it pretty much closed today. And we have the Russell. Let's pop that up. Russell is down, let's see here, from 2060 to 1940. That's not good. It is down 6% from yesterday to today. So the markets are in free fall mode, complete free fall mode. If you pull up the 4-hour chart, the Russell's looks like it wants to test those lows from a couple of weeks ago, 2 months ago. It might even take the lows out. If you pop the Dow Jones up, same thing. It's under the moving averages. It looks like it wants to go down and test, 32.2 to 32.7. That's where it was, in the end of February to the early days of, where was that? March, right? So that's probably where it could be going, in the very short term here if things continue to look this bloody. And pulling up SPY, take a look at this. We do have that inverse head and shoulders, which, believe it or not, is still intact right now. I think we mentioned that in my previous video, so that's still intact. But, I mean, look, it went down 2.7%. It is clearly in free fall mode, falling knife mode. And I do have a feeling, don't get me wrong. I could be wrong. I've been wrong in the past, no doubt about it. But I do have a feeling we might get some sort of relief rally at this point, maybe on Monday. Granted, if we have any piece of negative news over the weekend, that might just go out the window and we might just continue going down. But we're just so oversold at this point. The stock, again, the markets are down 5, 6, 7% in just a day and a half, 2 days. So I think we might get a little rebound here. But the second, let's say if I'm wrong and we break under 420, the second we do that, this is going straight for the lows, $410, which those were hit in the end of February. So I'm going to just put an alert at 420 for now. Mark is at or below. We'll see what ends up happening there for next week on SPY. And pulling up triple Q, let's see this. This is already under the lows from the end of January, so the inverse head and shoulders is already out of the window for triple Q. This is pretty much on its way, well on its way to testing that 315 low, which was hit about a month ago in the middle of March, right? Right on the 15th, 14th of March is where we hit 315, and that's very odd, actually. Holy crap. Guys, look at this. We hit $315 on March 15th, which is 315. That is very weird. That's kind of eerie in a way. But anyway, now we're at 325. This could end up going down, test 315, and maybe we take that low out. So the markets are not looking good. Again, VIX up 25%. It's now in the high 20s, which let me pull the VIX up. Why not? Look at the VIX. It's cranking up. It got all the way down to 18. That was in the beginning of April. And just literally 2 days ago, it was at 19. And now the VIX is ripping looks like it's continuing this uptrend that has been on for a couple months now. And if this gets over 30, it's not going to be looking good. Let's just put it that way. And let's pop crude oil up. Let's see what this is doing. Crude oil right around $101 a barrel. It did also go down today on the day, down about 2%. So everything went down. Sometimes when the markets are red, we have gold up, silver up, oil's up. But today, literally everything went down, and all we had that was up was the VIX. Oops, I just dropped my phone. Hold on, guys. I'm going to pull up Coinbase and see what the crypto market's looking like. Maybe that's doing well. I doubt it, though. Let's see here. Coinbase, and if you guys do want $10 free from Coinbase, you might as well use my link down below. I don't really buy crypto very often at all, but when I do, I use Coinbase, right? So again, use that if you guys want. I think 10 free bucks. So right now, Bitcoin is down, 3%. Ethereum's down 2%. And this is on the day, right? I'm assuming, past 24 hours. Yeah, on the day. Wow, so that means, on the day, actually, Bitcoin's down 4%. I was going to say, or actually, no, it's 3.1%. So Bitcoin's down more than all the indexes here, but Ethereum, believe it or not, is only down 2.1%. That's holding up better than the Russell, the NASDAQ, the S&P, Dow, all the indexes, which is pretty funny. I mean, geez, I didn't think that happened, but it did. So crypto's down as well, and again, like I said, everything is down at this point in time, and it seems like crude oil is now getting back under both moving averages on this 4-hour chart. So that is one thing to monitor for next week, and I'm sure we'll cover that again maybe on Sunday or Monday. Don't worry, guys. We make videos every day here, so make sure to subscribe if you haven't done so already, and smash that like button, because now I just realized we talked about the markets, and we got to start talking about some stocks. So let's talk about some earnings, because today, although it wasn't the most extravagant day for earnings, it wasn't like we had Apple or Google, and by the way, they're reporting next week. But we did have some companies. We had Verizon, Kimberly-Clark, and the list goes on. So let's start with Verizon. The ticker on this one is VZ. This stock ended up going down 5.6% on the day. So like the markets, it didn't do well. In fact, it did way worse than the overall markets. We had Verizon report earnings. They did $1.35, which came in line with the estimate for earnings per share, also known as EPS, if you guys didn't know that, for the small amount of people that didn't know that. Revenue came in at $33.6 billion versus $33.54 billion estimated, so they came in line. EPS revenue barely beat, and I don't think I saw anything on guidance necessarily. I'm not really sure. Let's see here. But the fact that the EPS number came in pretty soft, it looks like they beat on an adjusted basis, but barely. I mean, by 1 cent on the EPS. So it pretty much came in line. So maybe that's why the the company's going down. Oh, wait a second. Or the stock's going down. Here it says Verizon lowered 2022 service and other revenue guidance. Okay, there you go. Maybe I missed that. I guess they lowered their service revenue guidance. So there you go. The stock's collapsing. And believe it or not, it's still up when you look at where it was about a month ago. About a month ago, Verizon was at $50, $51, and now we're pretty much at $52. So believe it or not, it's still up, but it did erase that entire 8% gain that it saw when it ran from 51 to 55.50. Now we're pretty much right back to 51, 52. So it did erase that gain, but it's not that bad, and now it's more oversold like a lot of stocks are in the markets. So let's see if we get some sort of bounce here on Verizon stock. Look at this on the 4-hour. Look, we're still technically holding an uptrend here, as long as we hold above $51, $52, which as of now we are. So let's see if we get the buying pressure. Volume's kicking up because we had a lot of selling pressure today. So let's see if we do get some buying pressure next week. Who knows? We gotta wait and see. But Verizon overall, not too bad. Earnings guidance, it's not good. But the stock, it could still bounce, guys. That's the thing you have to realize. If earnings are not that great, sure, that's not good long term, for the next couple of quarters, but in the very short term, the stock could still move a little bit. It could still bounce up and do its thing in the very short term. So keep that in mind as always. The next one here is Kimberly-Clark, which is KMB. You guys probably don't know this company. If you didn't know, I just pulled up the products that they have. Let me show you guys this, and let me see if you can even see it here on the camera. Let me make my face bigger. Do you guys see these right here? You see these? These are paper little towels, right? Yeah, Kimberly-Clark, that's what they do. So, what I mean, that's a consumer staple, right? So, that is what Kimberly-Clark is, if you guys want to know in a nutshell. That's a big part of their business, right? A bunch of household, personal care products. They're consumer defensive, and the stock did very well today. I mean, look at this, guys, very, very well. Unlike Verizon, which we just talked about, Kimberly-Clark went up over 8% on the day. They did adjusted EPS of $1.35 versus $1.23 estimated, which beat. They did revenue of $5.1 billion versus $4.9 billion estimated. So nice double beat for Kimberly-Clark, and their guidance, guys, is pretty dang good. They see full year 22 adjusted EPS of $5.60 to $6 versus $5.75 estimated, which that's above the estimate on the higher end of that range. And they see that's a tongue twister, isn't it, guys? Full year organic, there we go, sales up 4 to 6%. So pretty solid guidance on sales, EPS. They crushed the quarter. And I'm assuming, I haven't dug deep into their reports, guys, and honestly, I've never really done much research into Kimberly-Clark, but it's a boring company. Number one, they pay a dividend. I know that for sure, and they've definitely been paying that dividend. I'm not going to say for sure because, again, I haven't done much research into it, but I do believe they're a dividend aristocrat or pretty dang close, maybe even a dividend king. I have to double check it. But I do believe they have pricing power, so they can ride out inflation. Right now, obviously, we have a ton of inflation. This company's probably doing just okay with inflation. Same with Costco. That's another one, hence why Costco stock's been crushing it. And that's what you guys got to realize. If there's pricing power, you're going to do fine during inflationary times. That's just the reality of the matter for these businesses. So K&B at this point, again, it went up 8% on the day. Let's be honest, it's pretty overbought. I'll be the first to tell you. It's at $138. Pretty overbought. So I'm going to just wait and be patient. And I'm not going to say I guarantee, but I would not be surprised at all if this stock came down to the low mid 130s again. Maybe 130, 132, 133. Maybe even under that. Maybe high 120s. That is where I would consider picking it up. Maybe $128, $130. But in the meantime, we're just going to sit back, relax, let the stock digest the earnings, and sure, it might run away from us. Maybe it doesn't pull back, but that's a risk I am willing to take at this point. I don't want to buy here at these elevated overbought levels. So Kimberly-Clark, it's a boring company, let's be honest, but it's doing pretty well here in the short term. Another one that I'm looking at is AXP, American Express, which went down 3% on the day. You guys saw that, 3% on the day, and they actually did pretty well, I would say, guys. Look, they did EPS of $2.73 versus $2.44 estimated, which beat by about 30 cents, and they did revenue of 11.74 versus 11.62 billion. So nice double beat for AXP, and they pretty much reaffirmed their 22 revenue. They still see it up around 18 to 20% year over year, which I'm assuming, since they're reaffirming that, they must have said that maybe last quarter or something like that, or maybe the quarter before. So not too bad, pretty decent, I'd say, quarter for American Express. It wasn't like a blowout quarter or anything wild, but nice, solid, good guidance, I would say. Nice double beat. So we're noticing, again, it went down 3% on the day. And what are we seeing here, guys? It is just digging itself deeper and deeper in this wedge. If I redraw this wedge, look at what's going on. We're clearly making higher lows and at the same time lower highs. Do you not see what happened just recently, yesterday? No joke, guys. Yesterday, the day before, we hit 192, 191, which the previous high was 194. The previous was 199. So we're making lower highs, but higher lows at the same time, right? 157. We hit 174 just about a week and a half ago. And now we're at 179, 180. If we hold here, we might make a move back towards 190, test the wedge again, the top of the wedge, and if then we break out of there, maybe we see a big move towards that 200 level, which with the markets looking the way they are right now, it's just not going to happen. And if the markets are just continuously going down and down and down, but we all know that's not how the markets work. I guarantee you Monday, Tuesday, Wednesday, one of these days, well, I don't want to say I guarantee you, but I would not be surprised if we had a nice bounce back day. And if we get a bounce back day like that, maybe one or two in a row, which quite frankly the markets are in need of, they're due for it because how oversold they are. I think AXP is going to come up in a big way again from 180, 185, 190. Maybe it breaks out. Who knows? So we're watching it, guys. AXP. We also had NEM today report, Newmont. Let's see what they ended up doing. They did Q1 adjusted EPS of 69 cents. And revenue of $3.02 billion. And they declared their first quarter dividend of 55 cents per share. And let's see here. What has their dividend been doing out of curiosity? The past 3 years. Has it been going up? It's been going up, guys. They paid 14 cents back in 2019, roughly, that year, 25 cents in 2020. Now they've been doing 55 cents over the past couple of quarters. Not too bad, not too bad. So if you're a dividend investor, hey, this could be an option for you if you want some exposure to, mining stocks, which I'm not telling you what to do. Obviously, I'm not a financial advisor, but they did just declare a nice dividend, and, they've been paying it and increasing it over the past couple of years. So not too bad. So, again, 69 cents EPS, $3.02 billion, 55-cent dividend. And one thing worth mentioning about Newmont Corporation, guys, is they said they were going to do a 2022 buyback. They were going to do, what am I saying? I'm mixing up the words here. A $1 billion repurchase program. They were going to do that in 2022. Well, guess what? They have 475 million, just a little bit amount of money, $475 million remaining on that $1 billion. So they're going to continue repurchasing the stock, $475 million worth over the next couple of months for the rest of this year. So that's one good thing. And like a lot of these stocks, guys, look, Newmont is oversold. It went down 3.3% on the day. It's now down 15% roughly over the past couple of days. And believe it or not, the uptrend is it's trying to hold. It's fighting to hold right around $75. If it starts breaking back over, I'd say 78, back over that 180 SMA, I'm going to be watching it very closely. So in the meantime, I'm just going to set an alert. Mark is at or above 78. We'll see what it does. If it breaks out, boom, 85. That's where this thing could be going, so watch out for NEM. Now, let's talk about two more that I'm looking at that didn't report today, but I'm still looking at them. Number one is Ulta, which went down 3.5% today and is now down just about, 7.5%, 8% from that recent 438 high, which was just hit, guys. Ulta's been doing well. Look at the stock. We just hit $440, 2 days ago, and that was a fresh high on the 4-hour chart. In other words, a multi-month high. So I like Ulta a lot. I think this will continue doing well. And honestly, I'd love to see it break under 405, which is right by this 50 moving average. If it breaks under that point, if we get some selling pressure, 380's next, 380, 390, which is right by the 180 moving average here. That is where I would strike, meaning there could be another 5-6% downside here. So I'm just going to set my alert. I'm not going to say no pressure, but what's the term here? No rush, right? We're not going to just panic into the stock or FOMO into it. No rush. I'm going to do it here. Mark is at or below 400. We'll see next week if it hits. Okay, if we go under 400, 390, that's where I'll put my first order, buy order, maybe 380, my second. So Ulta is one that I'm looking at for sure. And the last one for this video, guys, make sure to hit that like button if you stuck till the end. I appreciate all of you out there. Google, G-O-O-G, guys, Google today is now dumping, and I talked about this in the Discord chat this morning. If you guys are in that Discord chat, it's free. use that link down below. We talked about, hey, if 2,500 broke on Google, I'd be looking to buy more. I didn't do it yet today, but I'm still looking to buy more, guys. And Google, if you didn't know, is my biggest position for the long term, and I love buying at discounted prices, which at this point, let's talk about the numbers a little bit. Excuse me, guys, as I'm choking on my own words. With today's 4.2% red day, Google is now in a bear market. It is down 22% from all-time highs, which is where, we hit those all-time highs. When was that? In the beginning of February, so about 2.5 months ago. And now that we took out that 2,500, 2,450 level, and we hit all the way to 2,380, guys, we're in free fall mode. This thing's collapsing. It's clearly a falling knife. So let's pull back a little bit. Let's go to this yearly chart and see where it could be going, or this is the 3-year chart, rather. This is the yearly chart. So, okay, now we're going down. We're probably going to go down. I don't want to say for sure, but if this sell-off gets worse, which I'm kind of banking on, well, I don't want to say banking on necessarily, but let's just say if it does get worse, I'm prepared, and Google is one that I'd love to buy. Again, 2,300, which we're now in 2,300, down to about 2,200 and lower 2,000s. I'd love to pick up shares, and I've been saying this. I want to get as much Google as possible within reason, of course. I'm not going 100% of my portfolio in Google or anything above, 10-15%. Honestly, guys, I'm not a big investor in terms of putting a lot in one position, and by a lot I mean 50% of my portfolio or 75%, right? I think 10% is reasonable, right? And I don't want to go more than that. But let's just say I want to get a lot more Google. Ahead of this split, we have the 20-for-1 split, which is coming up here on the 15th of July, which is just in about 3 months. And you guys remember how quickly it went from January to April. Now we have April to July. I'm trying to get as many shares of Google as possible. And with the stock price coming down, this is a perfect scenario. So the trailing 12-month P right now is a 21, guys. And if you didn't know, Google is growing their revenue well over 20% year over year. Excuse me, guys. So the fact that their P is a 20 now, it's getting into a cheap category, in my opinion. If the P gets to 15, 16, 17, it's going to be to the point where it's a really nice bargain. So I'm looking to get more Google. Again, it's my biggest position already, and I'm just going to be buying more. I'm going to be accumulating more, and I'm very happy to do that. The market cap is $1.5 trillion. In my opinion, this could be a $2.5 trillion company, no problem. Maybe $3 trillion one day. Apple is. It was at least, probably not anymore with the market selling, and I think Google could be as well. I think Google could be as well. And let's say that the sell-off gets really bad to the point where Google gets to a $1 trillion market cap. Let's say the stock goes to 1,500 or something like that. I would be loading the boat like no other at that point. And at that point, from 1 trillion to 3 trillion, that'd be a nice 3x. Hey, I think that's possible if that scenario were to play out, which we're not anywhere near that at this point, so keep that in mind, guys. But just playing some devil's advocate, or just thinking out loud. So enough of me blabbering. Let's wrap the video up. Holy crap, we're 26 minutes in. I did not realize. Well, I guess when I edit the video down, it'll come down to about 20 minutes. But overall, I blabbered a little bit. If you enjoyed it, hit the like button, subscribe, drop me a comment, and make sure to join my Patreon. And don't forget to get your free money from Moo up to 6 free stocks, each of which could be valued all the way up to $3,500. Just use the links down below. Get all that money, guys. I'll catch you guys in the next video. Thanks for watching. As always, peace out.